Both Alberta Premier Danielle Smith and Saskatchewan Premier Scott Moe are playing with fire by fanning the flames of separatist sentiment. A new Angus Reid poll, I'll put the link in the video description, shows that prairie voters favoring separation are heavily influenced by the government of Canada's treatment of oil and gas issues. Well, who has been mostly responsible for accusing Ottawa of frustrating oil and gas ambitions? Why? None other than Smith and Moe. What a coincidence. I want to make an argument that you won't hear anywhere else, that the framing of the separation debate is premised on the global oil and gas status quo existing for decades to come, but that premise is wrong. And if the premise is wrong, how much risk would be created by giving in to Smith's demands? Well, let's start with this question. Why is oil and gas demand central to the separation issue? Because all Smith's demands of the federal government are about building pipelines and LNG plants. As I argued in a Monday video news story, which I'll also include in the description, Smith's televised speech on Monday was entirely about the Alberta-based industry's plan to significantly expand production. So let's dig into this a little deeper. Many Western Canadians, like Smith in the oil industry, believe OPEC's forecast that demand will grow significantly by 2050. If global consumption is going to rise by 17 million barrels per day by 2050, why shouldn't Alberta be allowed to double oil production to 8 million barrels per day? Albertans, in particular, are mad as hell because they think the federal government prevents pipelines from being built to the east and west coasts. For example, Angus Reid's polling shows that support for separation goes down a lot if Ottawa permits construction of the Energi East pipeline. Do these voters know anything about the Energi East project and why TC Energy withdrew the application in 2017? Not likely. Now let me give you the other side of this argument. Who needs pipelines if global oil and gas demand peaks in 2030, then begins declining a few years later? In fact, new pipelines would come into service just as consumption begins to drop, likely leading to massive financial losses if that infrastructure becomes stranded assets. The energy transition is a very serious risk factor for new oil and gas infrastructure. Ask the super majors like ExxonMobil and ConocoPhillips. They're busy exiting high-cost, high-emissions oil fields and crowding into projects with break-evens of $30 per barrel. Here's a Reuters headline from March 26th, quote, "Welcome to the age of big oil's managed decline," end quote. The smart money knows what's coming and is preparing for a long period of low prices, which will lead to major disruption of the global industry. Is it any surprise that Canadian pipeline companies like Enbridge and TC Energy have publicly said they are not interested in building oil pipelines in Canada? Who does that leave to build pipelines? There's only one, the Canadian taxpayer. Just like Canadian taxpayers built the Trans Mountain Expansion Pipeline, initially budgeted at $5.7 billion, but $34 billion by the time the dust settled. Smith and the oil industry never address risk. They're too busy hyping the upside of growth and expansion. Well, beware the hypesters, the snake oil salesmen, the timeshare hustlers. That way lies dragons, folks. The threat of Alberta separation is nothing more than a crude hammer Smith thinks she can use to bludgeon Canada into submission instead of doing the hard work of coalition building with other provinces, the hard work of building a productive relationship with the Government of Canada. Now, the International Energy Agency and numerous other forecasters say that oil and gas demand will peak in 2030, then decline during the subsequent decade. If they're right, the risk of expanding Alberta's oil and gas is tens of billions of dollars of stranded assets paid for by Canadian taxpayers. By you. Before you decide to support separation for Alberta and Saskatchewan, ask Danielle Smith and Scott Moe to explain the risks, not just the benefits.